Going to begin. Good afternoon on the East Coast, and good noon on everyone middle part of the United States. This is our third in the series of 2020 Vision for 2020, the Lewis Thompson Weekly webinar that's dealing with navigating COVID-19 legislation, administrative edicts. Today, we're going to spend about minutes summarizing the phase 3 or phase 3.5, as Davidson likes to call it, of the COVID-19 federal legislation. We're about what we know right now that is the law, the amended act, and both Katie Goodner and Davidson will We're also monitoring the entire period of time, and it will be longer than 30 minutes, maybe an hour, maybe more than an hour, on the Main Street Lending Program. We're going to have some bankers also in attendance on Zoom, so we'll get a lot of feedback, and maybe we'll have the ability to answer questions next. And then we're going to talk about what we still don't know, what's going to happen with the HEROES Act, various state and federal small business expense protection acts. Davidson's going to talk a little bit about this relief program, which should be somewhat of a model for other states. And with that, I'm going to turn it over to Katie.
Thanks, John. I'm going to cover a little bit about what we know today. A lot of this, if you've attended prior webinars, I may go through quickly because we've already touched on it. We just now know that it has been signed into law. The first is the PPP Flexibility Act that we talked about in quite a bit of detail last week, that President Trump, the Senate passed last Thursday, and President Trump signed into law late Friday afternoon. And a lot of this information, like I said, we've already covered, so I'll go through it quickly. The big takeaways are that for those of you who have received a PPP loan, the terms have added some flexibility. The 8-week period has been extended to 24 weeks at your election. Borrowers can still choose the 8-week period, but for a lot of borrowers who were not able to reopen at the time that they received their loan, or still have not been able to reopen or reopen fully, you have the option of electing a 24-week covered period instead of 8. The second kind of major prong, and there's still a lot of questions around how this is going to play out, is the qualified payroll expense threshold that drops from 75% to 60% for loan forgiveness. The language is slightly different in the PPP Flexibility Act than it was in the CARES Act. And the language in the CARES Act was 75% of the forgiven amount. In the PPP Flexibility Act, it's 60% of the total loan amount. And what a lot of people are questioning is whether that is really an all or nothing, that you can have 59.9% of your loan amount, total loan amount, go toward payroll expenses and still be ineligible for forgiveness. Whereas under the language in the CARES Act, there was partial forgiveness eligibility. There's been a lot of questions submitted to the SBA and to Treasury. Congress has actually asked them to issue additional guidance on this issue. So we're monitoring that, but that is something that is still kind of up in the air, that has some people nervous right now. But the good news is there's a 24-week period if you so choose as a borrower. The other thing that is good for borrowers that we touched on last week is the expansion for your FTE reduction. And there's 2 more safe harbors in addition to documenting someone refusing to come back to work, you're unable to rehire that employee. You can also now show you were unable to hire a similarly qualified employee by the end of this year. or an inability to return to the same level of business activity that you had prior to February 15th, 2020 by the end of this year. All three of those will help you as the borrower avoid any full-time employee reductions that could be applied if you're not able to get your staffing levels back to where they were. If we go to the next slide. Another thing that changes is we now have 5-year loans instead of 2 for new loans, although borrowers and lenders can modify that if you have a pre-existing PPP loan. We'll talk about deferring payroll taxes here in a second, but that has been expanded now to all borrowers. You're no longer ineligible if your PPP loan is forgiven. And the important thing that I keep telling everyone is to continue to use your PPP loan funds, document them well, use them pursuant to the terms, document your needs, and just keep a file on hand so that you have that when you're ready to submit your loan forgiveness application. And we do anticipate a new application coming down the pike for that. So that covers PPP Flexibility Act. And we don't really have a slide for this because we've talked about it a lot, but one of the things that we've had some questions about is the employer portion of the payroll tax deferral that was provided for in the CARES Act. And originally, guidance said if you got a PPP loan, you were not able to take that deferral. What the deferral does is says employers, if you need to, you may defer paying the employer portion of Social Security tax, that's 6.2%, for your employees as a stimulus effort. This is part of this stimulus package that we're offering. And employers, you don't have to do anything to prove it. You can just claim that credit or you claim that deferral, simply not pay it. And there is a deferral period for up to 2 years. Originally, the PPP guidance said if you got a PPP loan, you were ineligible to take that deferral. There was some interim guidance that changed that and said, well, you can take it until you get a decision on your loan forgiveness. And what the PPP Flexibility Act does is it just says everybody's eligible. All employers may take this deferral. If you have specific questions about how that applies to you, please let us know. Myself, one of our other tax attorneys, we're happy to help answer questions on that. But that is something that has now been expanded and there are no limitations on who is eligible to use that payroll tax employer portion of payroll tax deferral. So that gets us through the PPP Flexibility Act. And really one of the things that today we're going to kind of tee up, as John mentioned, for next week is the Main Street Lending Program that is kind of this next wave of economic relief that was provided for in the CARES Act. We still are getting additional guidance. I think that's going to continue to come out. We had FAQs that were released and updated again on June 8th. And we're going to talk a little bit about some of those changes. But just a recap and to kind of prepare you for next week so you can be thinking about questions you may have or things that you would like to see addressed, you can please let us know ahead of time. But these are loans. They're not forgivable. They are loans that will be repaid that are aimed to small to mid-sized businesses. And they are now 5-year loans that changed in the June 8th updates. But to businesses who were, and the definition is good financial standing prior to the COVID crisis. And the date that we'll kind of look at is existence prior to March of 2020. But some of the changes that we saw on June 8th, we now have banks required to keep 5% in-house. As I mentioned, the loan term was extended from 4 to 5 years. And we'll talk about the payment structure here in a second. That kind of increased the deferral period. And it also changed the minimum loan amount from $500,000 to $250,000, which really, that was one of the main criticisms for a lot of small businesses is we don't need the $500,000 loan. We're not gonna qualify or need that. And so it was putting these Main Street Lending Program loans outside of their reach. So the floor has been dropped to $250,000 minimum loans. And now the lenders may lend up to 35 million instead of 25 million, or refinance up to 300 million instead of $200 million loans. And that's going to be based on relative to a 2019's earnings threshold calculation. But most important takeaways are that drop in the floor to 250,000 and the extension of the period of the loan to 5 years. The rates are going to be your LIBOR, your London Interbank rate, 1 or 3 month plus 3%. And for a lot of borrowers, that may be less than what you're paying on a lot of your loans right now. And if you look at the payment structure, the extension to 5 years has a lot of benefit. It's not just going from 4 to 5. You now have interest deferred for a year and principal deferred for 2 years as opposed to 1. Then the principal gets amortized in different amounts. You'll see 15% for years 3 and 4 and 70 for year 4, and then the loan matures at year 5. So the extension there is hopefully giving a longer period of time for borrowers to get their businesses back up and running. There's been a lot of acknowledgement that levels may not return to pre-COVID numbers as quickly as anticipated, and not having principal payments, not having interest required for that year and 2 years will really help businesses get cash flow back to where it needs to be, especially to service these loans. There's still a lot of questions about refinancing existing loans using Main Street Lending Program loans, or still tracking that and additional guidance that comes out. But we'll be talking more about this next week. Tanya, if you want to go to the next slide. Just to kind of keep in mind for eligibility, eligibility is expanded well beyond what it was for the PPP loans, although anything that would make you ineligible for PPP, such as criminal charges and felonies that were listed there, certain ownership structures, things like that, those are still going to come into play, but we now have a 15,000 employee threshold as opposed to the 500 employee threshold. And then you have that or annual 2019 revenue of less than 5 billion. Big things that we talked about last week were created or organized in the US. We'd gotten some guidance on May 27th with updated FAQs that clarified that a little bit. So you're welcome to go back and look at that webinar or check out those slides for some more details on that. And then haven't previously participated in a primary market corporate credit facility, which doesn't apply to most borrowers, but it is there, and not received support under the CARES Act. There was a large business loan designation, and again, most borrowers are not going to fall into that category. If you did, let us know, and we're happy to talk through that. But we'll be talking a lot more detail about this next week. And again, I encourage you, if you have questions or things that you'd like to see addressed, to email one of our team members, email to Tanya. And we're trying to monitor what the biggest issues are for clients and for borrowers right now. What are your questions, and what can we continue to monitor? With that, I will turn it over to Davidson.
Thank you, Katie. And I just want to touch on, I guess, the last part about being able to qualify for a Main Street if you received aid under CARES Act does not apply, just to clarify, to PPP loans. So you're still eligible for a Main Street even if you received a PPP loan?
Correct.
I know John was cutting out a little bit, so people might not have heard exactly what he was saying, but next week we're going to cover Main Street in more detail and for a longer period. So we're kind of wrapping up today, and I know from seeing the list of names, I recognize only about half the people in here this next section applies to, but it's still something worth mentioning, and that is the Tennessee Business Relief Program. And even if you are not located in Tennessee, this is still something to at least have on your radar, because the funding for this program actually is coming from the federal government. So as John kind of alluded to, it may serve as a model for other states in the future. But how Tennessee is doing it is on June 2nd, the governor announced this new program called the Tennessee Business Relief Program. And they're going to take the federal funds given to them, which was $200 million, and they're going to distribute it automatically to businesses that they find eligible if those businesses had to close mandatorily due to COVID-19. And so anybody who pays sales tax or business tax with the Tennessee Department of Revenue is automatically on the radar. You still have to be eligible in the list we'll get to in the next slide here in a second, but you don't have to apply for this. You will just get it automatically. They will either direct deposit into your account if you've already linked your account with the Tennessee Department of Revenue, or they will send you a check. But they haven't determined the dates at this time. But this is just a grant. It is not a loan. So you would just, if you end up qualifying, there's nothing more you have to do. It will just, one day you'll have money in your account. And they're going to base that amount they give you on your annual gross sales, but they haven't really given us much more information than this. So we don't know how they're going to determine the exact amount, or how they might determine the business closures. But if you want, we'll get to the next slide here, Tanya, please. You'll see that several businesses are automatically going to be eligible for this. They've said that 28,000 Tennessee businesses will be eligible. So, this will apply to a lot of people: bars and restaurants, hotels, barbershops, gyms, theaters, zoos, kind of you name it. And then there's an expanded category where, if based on your taxes that you've turned into the Tennessee Department of Revenue were reduced by 25% in April, it will also apply essentially to stores, regardless of what you sell. They've even included the miscellaneous stores, so it seems pretty widespread. We don't know exactly who will fall into that miscellaneous category, but judging from the others, if you're a store with a 25% reduction, you'll probably also receive this payment. And so with that, we're just going to conclude here with a little bit about what we're monitoring and what we still don't know. And if we'll skip to the next two slides, obviously we're monitoring the main, or go back to, obviously we're monitoring the Main Street program very closely. That's the next big program. It's going to be the subject of next week's webinar in detail. Hopefully we'll be able to get a lot more information to people and get people teed up and ready to go with that program. But we're also still monitoring the PPP Flexibility Act, because with the new law comes new questions, which means there'll be new guidance to answer those questions. We haven't seen that all yet, but Katie touched on some of these questions. One of the big ones is that new 60% payroll threshold, and whether or not that applies just to the 60% of forgivable or funds spent intended to be forgiven, or whether that will apply to 60% of all the funds given under the program. There's also the question of how you can amend your existing documents to take advantage of having these loans, if you hold over a not forgiven amount, go beyond that 2 years now. There's more questions with their language of the inability to return to the same level of business. They don't really define exactly what they mean by that or how they will determine that. Hopefully we'll get some more clarity on that. And of course, there's also the new, concern of this alternate cover period that was on the earlier loan forgiveness application. Is that going to stay now, or how is that going to work with the now 24-week period that is going to apply to all these loans? And with that, we're also still monitoring the HEROES Act. It passed earlier. It's mostly for employees, not really geared towards businesses. Unlikely it's going to pass in any way, shape, or form similar to how it is now, but it's still something on our radar, as well as the Small Business Expense Protection Act and how that will change the ability to deduct qualifying expenses if they were paid with forgiven funds. And of course, there's still plenty of things we still don't know. As we move on here, we don't know what changes we will see in the HEROES Act. Oh, you want to skip to the next slide, please? What changes we'll see in the HEROES Act as it prepares to go for a vote. Obviously, there's been a lot of coverage that it's not going to stay in the same shape it's in now, and it's going to undergo a lot of changes before it has a chance of ever becoming a law. So time will tell what those changes may be. We also don't know when we'll receive any of this new guidance for the PPP Flexibility Act. We know it'll have to come, but who knows when. We also don't know when the Tennessee Business Relief Program will start distributing funds, or when they'll provide us more information, nor do we know when other states might look to that program and model similar programs with the federal funds that they are receiving. And of course, in that same vein, we don't know what other stimulus measures or legislation or amendments may be coming down the pike in the future. So we just got to keep an eye out, and we are keeping an eye out. We will keep you guys up to date with eBlast or these weekly webinars whenever new things come down. And with that, we finished up this short weekly webinar. If you have questions, you can email us, call us.
Our numbers and emails are on the screen, and we look forward to hopefully seeing most of you guys back next week here at the same time on Wednesday. And have a great week.